Welcome back, y'all. Gonna talk about cash secured puts in this video. Um, Real briefly, I'll explain a couple of details, and then we'll get into a couple of examples. You're basically selling a short put option contract with enough capital to cover 100 shares of the strike sold. Right. So, example, I'm looking at TNA here. This is one of Phase's favorite uh, option or ticker to sell cash secured puts on. Right. In this scenario, let's see. We're going to go to the option tab here, and I know Phase. I'm just going to talk about how Phase does it. It likes to sell weeklies, or 9 to 15 days out, and it goes for the something for a 30 delta. So that's probably going to be the best bet on this one. Um, and you know, with a 82 or rather a $75 strike, you need $7,500 worth of capital to cover this position, right? That's why it's called a cash secured put, because your cash secures that put in the event that it finishes in the money, which you end up owning 100 shares of the underlying, right? So that's very important to understand here. Um, and also, again, we always look for high implied volatility on selling options in general, right? So that's something to also, always keep in the back of your mind when selling options, period, right? I like to sell cash secured puts or CSPs at support levels, right? So we're going to go take a quick look and see where the 75 is at. We get almost a little bit less than a 30 delta. That's good. So we're going to take a look and see. So $75 will be here. All right, so let me just go ahead and draw out a line. So if I can get it, that's about as close as I get. So it looks like the $75 is really at a good support level. Right, you got a lot of bounce off of the $75 area. Let me just remove these to make this a little bit more clear. Oops. Just do that real quick. Okay, so now you can see you got multiple support levels at the $75 strike or $75 area. Right, so that tells me this is a really good uh, position to sell. Right, so I'm gonna go ahead and hit play here, and we're gonna sell this. I'm just gonna take whatever it gives me right now, 258. So we're gonna go ahead and do that, and there it goes. It took it. Okay, so um, I'm gonna pause it and I'm gonna fast forward so that you can see what happens when the stock price rises, right? And how much money you can make off of this, right? Now, um, again, one thing I want to kind of drill in is, you want to look for 5 to 10% returns or premiums on whatever you're leveraging. However, scenarios like this one with TNA, where you're doing, weekly contracts, for example, you're not going to see that kind of return, right? So um, I think 2.5% is what we're looking for, 2 to 2.5% here on leverage cash. So if the $75 strike, let's just take a quick look and see what's 2.5%. So 187, we got 263. Yep. So that's a pretty good return there for a week. Let's just take a quick look and see exactly how much that is. More than 3%. I think it's probably close to 3.5% here. Yeah, perfectly. 3.5%. So that's a really great return for a weekly contract. That's nearly 5%. So anyhow, I'm going to pause it and we're going to come back and I'm going to show you what it looks like when the stock moves in the direction you need it to move. All right, we're back. So I've moved it. That was on. So we bought it on the 12th, or sold it rather on the 12th, which is a Wednesday. Come back on the 17th, which is a Monday. So you had the extra 2 days of theta decay, which is always nice. That's roughly $24 a day, give or take. So now we're looking at stock price obviously being higher than what we sold it at, sold the CSP on. We needed it to move up, right? So now we're looking at $184 in profit, right? It's almost 70% return. This is fantastic for only having it for what, uh, one, two, three, four actual trading days, five, 6 total days. So 6 days of theta decay, and really just 3 days worth of trading, because I think we bought it around the same time, noon time. I'm not totally sure, but right around 3 to 3.5 days of time, and you're already seeing $180, right? So again, it's real simple to get out of this. Create a closing order. You're going to buy it back. That's worth $85 now. All right, so I'm going to go ahead and 84. I'm going to go ahead and there it goes. It took it at 82. All right, so it means the stock's still going up. Yep, stock's moving in a better upward direction. So again, we just made 100 plus dollar, 180 some dollars on that, right? 181. That's a really great return for less than a week of time. So those of you that are doing cash secured puts, that's or that are interested in doing cash secured puts, this is how we do it, right? So always keep that in mind. If it's a week out, a week contract, or a 2 week contract, you're looking for 2.5 to 5% return. If it's a month contract, we're looking for 5 to 10% return, right? So now I'm going to go with another another example with rolling, right? And normally I don't really care much to roll cash secured puts unless you're just confident the stock is bullish and you can continue to take premiums in when rolling that strike. And I normally wouldn't roll up the strike. Um, or the other scenario is the stock's going against you and you need to roll down, right? So we're going to take a look at something like that where you have to roll down the strike, or roll the contract in general because it went against you. All right, so I'm gonna pause it real quick, and then we're gonna jump into that. All right, we've made it back, and we're looking at Boeing, BA is ticker symbol. Looking at stocks, kind of looks like it's coming up on a support level. So we generally want to, again, I like to sell cash secured puts on a support level. That helps to where, if it does go in the money, at least you did it at a support level, and there's a very high probability the stock's going to come back above that support level. So we're going to go ahead and do that. I'm going to hit play here and sell contract. And I like to do monthlies usually. And now we're not really worried about the premium and stuff and percentages and all that. I'm just showing an example here. So we're going to go at the money, has the best OI. So we're going to sell that, try and get it for the current price. See what happens. There it goes. All right, so now we're in, and I'm going to fast forward to um, a day where we're down, and it makes you kind of start thinking, well, I should probably consider rolling this out because I don't want to get caught in a losing position or have to own these shares necessarily. Now, granted, you never want to sell cash secured puts on anything that you don't want to own, but really the object of the game is to not own the shares and just take those option contract profits and move on to the next thing and constantly recycle and compound your money. Right. So I'm gonna pause it real quick. We're gonna get the broker back to where I need it, and then we'll resume. All right, we're back, and we're at this point here where we had looks like it's kind of following this downward wedge, right? So it kind of followed this trend line down, and it kind of makes you think, well, perhaps this could be a bullish thing. I mean, a lot of people say this chart pattern is I'm sorry, bearish. A lot of people say this chart pattern is a bearish thing. Um, to me, I think it's kind of 50-50, but that's not object of this video. Object here is to assume that price is going to fall below the support level. So we're thinking, you know what, we should probably try to roll this current strike that we're in down, and I want to catch a green day so that I can potentially roll that strike down to protect myself from additional downside. Now, I'm thinking, just looking at the support levels here, maybe like the 223, 224 area, right? So number one, I'm going to go ahead and get the broker onto a day where it's nice and green. Then you can see kind of what the contracts look like on the levels that I'm talking about. All right, so we're back and had a couple of green days. Still have a negative feeling about the stock, and you think it's going to fall below the support level. And it's going to trend down this direction. I mean, in the past, I've had Boeing charted before, and it's had the same similar pattern, and it broke below that support level. So we want to kind of try and give ourselves a little bit more leeway here and time. So we're going to look for like 224 area, which is this level right here that I've got the cursor on. As you can see right here, this support level looks pretty good. All right, so we're going to jump over to the trade tab. And basically, again, what we're doing is rolling to the following contract, right? So we want to look at the 28th of May, right? So I'm going to change that real quick. So the 28th of May is showing $5 to have rolled down to the 225, right? That's okay. But generally, I want to try and roll down and get a decent amount of credit. So another week after is probably fine, right? So we're going to go for the June 4th. Oh, look at that. 85. That's terrific. I will take that, get down to the 225. All right, so let's go ahead and take that. And sold it. So, and I'm just going to go ahead and warn you, prior to having sold that, we were already up pretty good in profit. Well, let's just assume that we were kind of um, in the money or near in the money. We were worried about it going in the money and expiring, right? So now we've got this position here on Boeing. We've got the 224 strike, I'm sorry, 225 CSP, right? And we're basically given a little bit more time. We took an additional credit, rolled the strike down, and that protects us even further, right? So um, here it is, 940 and 88. That's our total credit, right? So now what I'm going to do is I'm going to fast forward to, let's see, we're on the 10th of May. We rolled our strike to contract to June 4th. So I'm gonna fast forward to maybe 2 weeks before. So let's say the 4th is there. So let's say this Monday, right here, the 24th of May. We're gonna go to that and see what that contract looks like. Now, as you can tell, it did drop below. Now that I've moved the time frame forward, it did drop below that support level, right? But because we gave ourselves a little bit extra time, we saved ourselves from being in the money, right? But theta's decayed this whole time, so you know we're seeing 100 plus dollars on this one, right? Um, let's go a little bit further in time to the 31st. All right, so as you can tell, stock here has increased a good bit, and we should definitely see some profit now, right? So there it is, 300 some dollars. When we rolled that other contract, because we were in profit, we took $696 on that, right? Um, now we're at another 300 some dollars. So overall total of profit for both contracts was 1188, or is 1188, right? Because when we rolled that first one, we were in profit, so it paid us that money. and then we sold the next contract, took in that additional premium of that 300 something, right? So it stacks on top of each other and ends up being a total profit of 1188, right? So at this point, this is kind of where I would probably have exited that position, especially when you see a gap, something like this right here, this small little gap area between these two candles. I think that's a good indicator to potentially get out, right? So again, when you want to get out of this position, you have to buy it back. It's worth $22, and that should initiate momentarily. It should actually initiate now. Its mark is 205 or $20.50, and I'm trying to sell it for 22. So let's just assume that that sells, or I'll tell you what, let's just do market order just to get it going. But sometimes on demand likes to not initiate stuff. I mean, it's market order, it's not selling. Anyhow, you all get the idea, right? Made a lot of money on this position, on this virtual trading. So this is how you do Castigared puts, and that's how you do rolls, right? This probably wasn't a great example on rolling something that's in the money and kind of down, um, but you get the idea, right? I mean, you roll your strike down, protect yourself from further downside and owning the shares, and you push the time further out so that you don't end up owning those shares. And the whole general idea here is to um, roll down to a strike that's potentially at support, but also something that's not going to push your time frame further out, and also hope to get some credit in return. Right now, if you don't get credit in return, if you have to break even, like if the stock's just plummeting and you have to break even, or rather you don't get credit, but you don't pay a debit and you can roll that strike down, that just means that when the stock does start to come back up or start to go up and be bullish, you're going to see profits sooner because your strike is lower, right? So that's the idea here, is to not be in the position for too long, because again, we want to recycle and compound our money. That's how you make a lot of money fast, is by compounding your profits. I hope this was helpful to everybody. And again, as always, give me a shout if you have any questions or need help with these types of strategies, and I'll be happy to help. Take care.